All right, we are going to start our last panel for the day. As I said, I really appreciate everyone's attendance. It has been a long day. Hopefully you've found it worthwhile. This panel is going to talk about the capital markets. It's really a further extension of Scott's panel. Scott got into the nitty-gritty with numbers and data, and we're not going to get into that. We're going to talk about what this panel is experiencing from a real lifetime moment. And with us are leaders in the capital market space. Ariella Tolkin is the Senior Vice President of the Global Cannabis Market at Jeffries. And with us is Richard Kimmel, who is the Chairman of the Cannabis Group at the law firm Berlis and the Securities Group. Also with us is Dan Foley, who is the VP of Finance and Investor Relations with CuraLeaf. Next to Dan is Brian Rose, who is a Senior Associate and was one of the leading forces of launching Moelis, one of the top investment banking firms in the country, into the cannabis space. And rounding out the panel is Greg Chin, who is a Senior Partner at CohnReznick, one of our sponsors today, and leads the charge in the cannabis practice there. So as we opened the conference with my award-winning video, you saw what's happened in the capital markets. Stocks have plummeted. Many of these stocks have gone down 50, 70, 80%, even more. There is a capital crunch going on, and as Scott Greiper was talking about, he's seen an incredible slowdown in the M&A activity. Ariella, I thought you could open us up, first talk a little bit about Jeffries' global practice, because there are very few pedigree firms like yourself in this space. What you're doing globally and what you can be doing in the U.S., and how you explain this incredible turnaround in the last 9 months.
Sure. So, is this on? Okay. Ariella Tolkin. I got involved in this space many years ago. I've been at Jeffries for 12 years, and I was focused on healthcare, particularly biotech. Through my efforts in biotech, I was introduced to a few companies that were focusing on cannabinoids for drug development. That was my first introduction, and then I quickly became aware of the large and growing industry, both in the US and Canada. So I spent the better part of 2016, 2017 convincing my firm that it was a really important part of the investment banking franchise and where we should be spending time. As of October of 2018, I received the green light to pivot from purely biotech and healthcare to focus on covering the cannabis industry. With that was not just, the investment banking professionals at Jeffries saying, Ariella, you can go call on companies, but it was really a firm-wide effort and dedication. So alongside myself, I work very closely with our corporate access team, who has also planned many events similar to this to make sure that we are connecting investors, companies, et cetera, in the space. We have a research analyst that covers the space. His name is Owen Bennett. He covers 11 Canadian LPs today. And we also have a very prominent consumer franchise where I partner with a lot of my investment banking colleagues over there to really connect non-cannabis companies with cannabis companies. For example, we're actually working right now with a consumer company on a potential investment in the cannabis space, which, if it goes through, will be very prominent and see the headlines very quickly. So what we're doing is we're leveraging really the firm to make sure that we are covering cannabis and really globally cannabis on all aspects. So particularly, we've worked on 7 deals in the last 6 months. Canadian LPs, we've worked with private equity firms that sold hemp business to a Canadian LP. We recently worked with a pet food company that we sold to a pet CBD company. We raised capital for both US companies on the ancillary side, which was Kushco, which we mentioned earlier today, and then also raised capital in Canada. So we've been extremely active. It's a very exciting time. And then quickly to touch on what's been going on in the last 6-9 months, I think Scott actually said it very well. There's a reset. Stocks have declined. There's been a focus on profitability or a lack of profitability. And there's really been, I would say an unfair decrease of all stocks, not evenly, but almost, every stock has seen a decrease. Any publicly trading stock has really seen a decrease in their value. I think what happens here is that, no, not all companies can go back to where they were, and most companies right now are not going to go back where they were without some kind of catalyst. But what will happen is that the good operators, companies that can execute, the companies that can deliver their projections, the companies that can really, they'll start getting rewarded for what they can deliver to the market and start really acting and feeling like a public company that can project their future. Those companies will start to get rewarded, and the companies that cannot do that will start to get penalized. So I think we'll end there, but I'll say there'll be a huge bifurcation in what happens here on out, driven really by earnings and execution on the M&A front as well.
So Jeffries, though, with respect to plant touching, you're not getting involved in those deals in the U.S., correct?
Not in the U.S. So globally, if you're operating in a federally legal jurisdiction, I have a green light. Ancillary companies in the U.S., so if it's one step removed, that's a discussion, but we were able to get approved to work with KushCo. But yes, the multi-state operators or the companies that are operating one or a few states that touch THC, currently we're not working with. We are working with quite a few CBD companies right now, though, CBD companies in the U.S.
So just to push the envelope a little more here on this topic, Scott mentioned KushCo, they're a great client of ours. You did an offering for them. The price went down from where it was expected. What do you think happened in the market? Because that's endemic of what's happening with other stocks as well.
I think two things in particular that I'll comment on. One, we launched a deal. It was a private deal, so it wasn't launched publicly, but it was a registered direct where we call investors and find out if they are interested in a description of KushCo without giving the name, and we bring them over the wall. But what happened was there was a lot of noise while we were raising capital in the vape market. I think it was Karen who mentioned, obviously, how her company operates, but similar to what Karen said, Nick went out on the road, the CEO of KushCo, and had the same message, right? So vapes, okay, understand the headlines, but you need to invest in a good operator. And I think what universally every single investor that we spoke to agreed that if they were going to invest in a vape company or a company that operates in the vape sector, KushCo was the company they were going to invest in. So they really saw good executors and a leader in the sector. But when you're pricing a deal and then you have Massachusetts come out saying there's a 3-month ban on vape, there are going to be investors that aren't able to invest anymore, that maybe even committed to investing. So that's what happens, right? And you see the share price continue to drop. You see their competitor Green Lane continue to drop, and it's the nature of the industry. KushCo and Jeffries went out and we said we were going to raise the $30 million that we set out to raise, and we raised it. And clearly, obviously, there was a drop in the stock price, but it was really important to the company and to Jeffries that we got that capital in the door.
So Dan, you're caught up right in the middle of this. Just a little bit about CuraLeaf for the audience, and then how are you guys viewing this? How you're dealing with it? Your investor relations. What are those talks like? Keeping people engaged and supporting the company.
Yeah, well, it's really interesting from the perspective of where we sit, right? Since we're not banked by any sort of U.S. banks right now because of the restrictions that are in place because of the federal illegality of cannabis. So CuraLeaf took a somewhat unusual path of doing an RTO in Canada on what I'd classify as a sub-regional exchange, the Canadian Stock Exchange, and no disrespect to the CSE, but it's not the NYSE or NASDAQ, right? So raising capital from large institutional groups was somewhat difficult, right? Even in the heyday when things were really euphoric and frothy. And what you've seen, obviously, is the froth has come off now and sort of there's a shakeout, right? And there's no new investors in the space that we're seeing, right? I mean, it's sort of the same groups of folks. Although there are a lot of people on the U.S. side of the border doing work, right? Friends of mine from my previous life who sort of understand regulated markets and limited license markets are doing a lot of homework, but they haven't gotten the green light from compliance to invest in the space. So there's basically just a gap, right? There's no capital to suck up what is happening in terms of selling right now. And it's interesting to see because if you look at sort of how CuraLeaf has ramped revenues over the last, call it 6 or 7 quarters, and turned, EBITDA positive in the last quarter, that trend is expected to continue. And so I think what's going to happen is exactly as Ariella described. There'll be sort of a shakeout between those that are sort of growing and can execute, deliver profitability, and those that cannot, right? And that'll just take care of itself over time. But we're kind of in this limbo right now until people can start printing headlines that are positive, then it's kind of stuck, right?
Well, how do you deal with the situation? And maybe you don't have necessarily a cash crunch at CuraLeaf, but other
Yeah.
public companies clearly do. You can't really access the public markets, or if you do, it's going to be in a significant downturn.
Yeah, well, I mean, we at the end of last quarter, we had about $107 million of cash on the balance sheet, and we did a retransaction, a sale leaseback that generated another $25 million for us. So we're, from a cash perspective, and given that a number of our states are now self-sustaining, so states like New York, New Jersey, Florida, Arizona, we're not having to feed the beast anymore. They can sort of sustain themselves, and every incremental dollar that they're sort of generating is going back into expanding facilities or operations in those states, and in some cases, we're just harvesting the cash in the case of New Jersey. I think we're in somewhat of a different position than some of our peers. We don't need to access the capital markets. I think our chairman, Boris Jordan, has been very clear on our conference calls, as has Joe, about the fact that we're not looking to raise any new equity capital in the near term. We'd love to do a debt deal if we could, right? Put a little bit of leverage on the balance sheet now that we're turning EBITDA positive. We think
Jordan's in the audience, so you can talk to him afterwards.
Yeah. I think that, given that, our cadence of growth and what we sort of projecting for 2020, and quite frankly, given what I see on a daily basis coming up from the dispensary level and what I see in our bank accounts, I think that we're going to be in a fine position, and hopefully we'll find a group that will eventually get us over the finish line on a debt deal at some point down the road, right? But in the near term, there's not a oh my gosh, we need to go out and raise capital this instant.
Well, you're sitting in an enviable position because a lot of companies can't say that.
Yeah.
I mean, Richard, you've been involved in a lot of RTOs, a lot of these companies using the public markets to go public. I'm sorry, using the RTO to go public, using their currency, their stock as currency in deals. Are you seeing a lot of stress with a number of those companies, and what are they doing to access capital? Are they going to the private markets now? Are they trying to do crazy debt deals? Do you think there is the ability to do an add-on or to even go public right now?
Yeah, so, and again, my focus, I'm a Canadian-based lawyer, so my focus is a lot on the Canadian LPs and the US ones. We act for a number of MSOs as well. The first couple of years, yeah, the equity markets were, there was no shortage of money, whether it was hedge fund money or retail money, and that has definitely dried up quite a bit. The companies that have assets or that are cash flow positive or are showing decent revenues are now accessing the Canadian banking system. So there are a number of Canadian debt deals happening, but from the big 4 Canadian banks, but they're very restrictive. So if you do have revenues and you do have your business kind of established, they are getting deals done.
Yeah, if you're in Canada, though, if those are
If you're
U.S.
Canadian,
operations,
yes.
BMO won't loan to you in the U.S.
That's correct. So the big 4 Canadian banks and some of the credit unions, yeah, they'll lend to Canadian companies. So we're seeing a lot of those deals right now. And we're seeing in the private, we're seeing more family offices coming into the space where we didn't see before, but they see the valuations have dropped, and I think Scott from Viridian kind of mentioned that too. They're seeing some opportunities as well. We're seeing some Canadian family offices looking at U.S. companies and some U.S. family offices looking at some Canadian ones, which we didn't see before.
So Brian, Moelis has gotten into this game, powerhouse investment banking firm. Maybe you tell us a little bit about what you're doing in the space, but also how you're seeing your clients with your mandates trying to access capital.
So just really quick, Moelis & Company, independent investment bank. We've got 19 offices throughout the globe. Our cannabis practice is really between London, New York, and Los Angeles. We try to pull on different individuals with backgrounds in real estate or gaming, kind of the regulatory, the industries that have some sort of regulatory nuance, I guess you could say. And there's individuals like myself who focus almost exclusively on cannabis. We've got probably 20 people covering it from any angle throughout the globe on a day-to-day basis. And our first real foray, we talked about how people got into cannabis. We were initially mandated 3 years ago on a capital raise for an SSO, at the time relatively large, kind of $50 to $75 million. One of the senior advisors to our board is a gentleman named Eric Cantor, the former Speaker of the House. And with Jeff Sessions kind of coming into play and his connections in Washington, he advised against working on that at the time. And then we got mandated by Afria, a name that some of you might know, about a year ago. And then we kind of jumped in 2 feet in. So we've been kind of all in for kind of 12 to 14 months now, Moelis more broadly. And we really have 3 different kind of products, if you will. So we do capital raising, M&A, and then restructuring and recaps, which hopefully no one in this room ever has to go through. And then so since then, kind of like I said, all in, and we've kind of got 5 things in the pipe right now. So we're not constrained by geography or by point in the value chain. We'll touch the plant. We've got a capital raise in kind of Central and South America right now. I'm spending most of my time on a MSO buying a private company in the US and then a capital raise out in California. So that's kind of most more broadly, Frank, to answer your question about what we're seeing. We went to market with a private placement about 3 months ago, which was, as we all know now, arguably the worst time to go to market with a private equity raise. And similar to what we've heard here today, it's a lot of family offices. It's a lot of family offices in this space. Even large private equity firms are kind of hesitant to touch it. You're starting to see certain groups raise THC dedicated funds. So we expect a lot of those to kind of come into play in the next 6 to 12 months, if you will. But in terms of how these deals are getting done, we ultimately had to adapt that deal. And this was for a business that had 35 million trailing 12 months EBITDA. So a lot of these companies are pre-revenue or not profitable. This company was established. Granted, a lot of that was coming from their cultivation facility, but ultimately we had to adapt the equity raise to be a little bit more debt focused. So it was a little bit more of a debt raise against a hard asset versus the kind of participating preferred equity raise that we were initially going to market with.
I mean, is anyone on the panel, maybe Richard in particular, are you seeing any of your clients contemplating trying to go public through an RTO at this stage in this environment?
The Canadian market, particularly if you're solely a cultivator, I don't think there's any market or possibility in this current market to go public. We are seeing, and we have a number of clients that are in ancillary businesses. We just legalized edibles as of last week, so we're seeing a lot of activity kind of in the edible space or ancillary businesses. So they're starting to look at potentially going public, similar with technology companies that are in the space as well. So 2 years ago, if you were an LP in Canada and you had a Health Canada license or even an application, you were worth a couple $100 million. That market's no longer there. But the ancillary businesses, we are seeing activity. We'll see if they're successful in raising it. But
What are you seeing, Ariella?
Yeah, I was going to say one thing that I would predict that you start seeing in times like this, when you see a lot of public companies decrease their market cap pretty significantly in a short amount of time, is you'll start seeing mergers where valuation doesn't really matter and you're focused on relative value and you're focused on ownership percentages, because those are the deals that can happen. Those are the deals that can add scale, can add obviously capabilities to current companies. So maybe the capital markets aren't there right now for some companies, but I think it's very likely that you start seeing combinations. And Scott mentioned the M&A activity has been pretty light recently. I think the last public company takeout over 100 million was done in the spring. There were obviously the Lord Jones traded this summer, and there's a few other transactions, but it's been pretty light. Based on our pipeline and I believe just the environment in general, you'll start to see companies that think about themselves and other companies as a relative value situation, and hopefully that will definitely motivate and improve the sentiment, because there are ways to obviously combine forces, maybe gain some access to capital and scale up without having to completely raise capital in the public markets, and I would say surrender to valuation that you're not comfortable with.
So Greg, you're doing a lot of diligence and counseling in the M&A space. We've worked with you. You're honestly our go-to firm, and I don't just say that lightly. You know, what we're seeing on the M&A side right now is a lot of trading of licenses in Massachusetts and in other states. But what are you seeing, and what are you counseling people on at this time about going into a transaction with respect to where valuations in particular are right now?
Right. So I would say since 2018, right up until Q2, we were witnessing the land grab. We had diligence probably close to 30 companies during that time frame, some pre-revenue to some very large deals that were announced in Q1 and Q2. Right after Q2, we saw a pretty significant slowdown, which exactly coincides with what Scott was saying and the capital crunch. Since then, we've seen some slight opening up of the markets in selected areas. So there were a number of transactions that were announced in Colorado. Colorado is now opening up, and so we see that as kind of a select market. But I would say what we're advising our clients from a valuation perspective is, if you're thinking about, you know, selling and seller expectations, might need to temper those down a little bit. You know, when we looked at the transactions that we had worked on during this time period, you know, about 50% of my work is in cannabis, the other 50% is in other adjacent industries, and the valuation multiples that you see outside of cannabis just don't apply. So we were seeing 0 or negative EBITDA companies, you know, 0 revenue companies, and the trading multiples were just didn't make any sense, whether they're using EBITDA or revenue multiples. And you know, we had occasionally seen some one-off deals where it was just a license that was trading, and they would be offered anywhere from like $5 to $15 million or so. I think those days are probably over now. We're not really seeing that. When we're advising companies that are thinking about prepping for sale is, you know, now is the time, since the M&A markets have slowed, buyers are taking a little more time, you know, get ready and prepare your company. Take the time to get your audits done, get your books in order, because on the buy side, that was one of the issues that we had run into routinely, is that because of the rush and the momentum to get these deals done while the capital was available, most of the sellers really were not prepared for a process. So it created a lot of challenges on the buy side.
So are we seeing new creative structuring on terms? For example, what is the panel seeing in deals with respect to trying to get an M&A deal done? You know, it's interesting. Some people look at the stock, and Ariella, we talked about this on a call. You know, the currency isn't as valuable as it was, but some people look at that as an opportunity to take the stock, because, you know, if they're willing to play that game, they could ride it back up. What is the panel seeing in regard to structuring of these kind of transactions? And I throw it out to anybody.
So we're seeing exactly that, Frank. I'm actually working on a transaction right now where it's an MSO whose paper's down, 35-something%. But the seller who we're representing and us, we actually think it's a pretty good company. And the seller's kind of open to taking an all-stock deal. So yeah, we're seeing exactly that. If you think the paper's good on the other side, then right now is the perfect time to take it. It's a seller's market from that perspective.
Yeah.
I'm sorry, go ahead.
Oh, no, I was also going to say, well, one positive remark, actually, that will lead me to what I'm about to say, but there's been a lot of, obviously, I don't want to say negative, but there's disappointment as it relates to ability to get finance. But I've seen private equity firms in the last 6 weeks start calling Jeffries and asking about the industry, asking to meet companies. You know, I don't think that a private equity firm that is, you know, prominent in healthcare, industrials, consumer is going to go straight for a plant-touching THC company, but they are definitely starting to get very interested in the space, and specifically around CBD. But that brings me to a point. There is a private equity firm that has an investment that is classified as a cannabis investment, and they are looking to exit. And basically, they're running a sale process right now, and the buyers are, you know, the Canadian LPs. So we're working with them and doing detailed analysis on which buyer is going to be the most attractive because the form of consideration is going to be in stock. So they're very acutely aware of how do I see the potential buyers, what's the growth prospects, how are they valued today, where are they going to be in 12 months. So there's a lot of focus on that because it's very clear that these companies are not, shelling out loads of cash to buy this company. It's going to be a majority stock deal.
And I think that's really what's really continuing to happen in this industry. And Dan, curious to hear, you have the significant grassroots deal that hasn't closed yet. What is CuraLeaf's plans on continuing to grow, and do you see your stock becoming more of a currency?
Yeah, I mean, I'd say that, at this point, given where we stand, right, we're in 11 of the 12 largest cannabis markets with a pretty significant presence in most of the key states that we want to be in. The exception would be Colorado, which we're looking at. Haven't done anything there yet. But sure, I mean, I think that there's a thought process behind what we do. I mean, I think we would look at and are continuing to look at potential small tuck-ins. And in the situation of where we stand and cash being king, right? I mean, we want to sort of retain our cash balance and use that to continue to build out what we've got in our portfolio, and we're about halfway there at this point. So, I think that, from where we sit today, right? I mean, it feels to me like we're at a starting point of where there's going to be some distressed assets out there, right? And there'll be an opportunity for folks like us that have a public currency to use that as a negotiating point with potential sellers who are looking to offload assets. And quite frankly, given that the froth has come off, the markets are becoming more attractive every day. So I tend to agree. I think you're going to see a pickup in M&A. I think it'll be a little bit more distressed.
Well, Greg, you see the numbers, a lot of operators. Dan, I'm seeing the exact same thing that you're seeing. We're getting a lot more calls regarding stress in operations. Whether or not they missed the boat in their capital raises and now they can't meet their budgets, or they were growing too fast. So we're seeing a whole new wave of opportunities starting to come. And you're seeing it. Greg, what are you seeing in a lot of the clients that you're dealing with?
Yeah, we're hearing the same thing. I mean, I think the industry, by and large, is being affected by the cash crunch, and folks are trying to conserve. And I was at the Benzinga conference in Detroit, Chicago yesterday. And a lot of these similar themes were being discussed, and I was talking to one of my MSO clients out there, and they've been very inquisitive, and they said they're seeing more and more distressed assets come their way, and often they're coming through some of the firms that help them with capital raises, where companies are reaching out to them saying, hey, we're looking to raise capital. The capital providers can't help them out, but why don't you talk to this company because they may be interested. And so I think we're going to see an uptick in that. And the other message that was coming out was that, the stocks are down, and most of the deals that we had seen have been like all stock deals or mostly stock deals, so maybe 10 to 15% cash as part of the deal, but most of them are all stock deals. But if the stocks are down and the MSO buyer, you like them, I mean, it could be a great opportunity to get in at a lower valuation. And so as a seller, I wouldn't turn your nose up at an offer like that.
Yeah, but it's always a question of timing the market, right?
Yes.
And we don't have the crystal ball.
Right.
If you guess wrong, you're in a worse position. But Brian, where are you seeing the pockets of capital that are still out there? I mean, we certainly see high net worth, family office, but you're out doing fairly large raises for a couple mandates. A lot of people in this room really want to know, well, where do I go for capital? Bigger is one thing, but what about for smaller?
Yeah, I mean, really that's where it is. I mean, there's niche private equity firms. Obviously, there's venture capital like Entourage, who was here a second ago, kind of those cannabis dedicated funds. Where and surprising to me when we started, where we've found a lot of success are the family offices. Especially, obviously it depends on the kind of business you're marketing, but especially businesses that are tangible to some sort of hard asset business. So whether it is an agriculture business, like for us, the capital raise that I mentioned a little bit ago, we ended up getting an investment from a very prominent family office, but they focused in real estate. That was where they had traditionally spent their time. So for them, they were really able to wrap their head around, okay, this is a cash flowing cultivation asset, and the investment just made a lot of sense for them. So we've been having a lot of luck with family offices up to this point. And then I think you're going to see, like I said, there's a lot of private equity firms that we've been talking to who are interested in ancillary or CBD now, but LPs in their funds won't allow them to invest in THC, and they're going to start going to market, at least from what they've told us, with kind of more THC or kind of broad cannabis dedicated funds, kind of Q4, Q1.
So they're looking at the State Farm Bill and they're getting comfortable because of that with CBD from hemp?
Yeah, absolutely. I mean, the big issue, at least, especially the hedge funds that we talk to, the real big issue for them is their LP pool. So they've clearly raised a fund with a certain mandate, and they don't want to breach that kind of client trust and client relationship. So, but that being said, they do have LPs that are interested in those kinds of investments. So I think you'll see smaller, more THC or broad cannabis dedicated funds. Companies like MGG, they've invested in, they did a debt investment into Mile High, for example. It was a CBD focused fund. They really like the cannabis space more broadly from what we've talked to, and they're in talks now about raising a kind of THC dedicated fund. There's a multitude of those examples, but that's just one that's kind of a little more public.
Well, I think that's what we will see to fill this void right now in the marketplace. I'm seeing in being approached by more debt funds, several private equity groups that are also looking at an AUM play, will get assets under management, and they're pitching to their investors that we will have different silos. And if you don't want to be in cannabis, we won't put your money there. If you do, we can put it into hemp or CBD. So I do think that that's probably where the capital is going to come from until the markets stabilize. Which leads us to that question, when does the panel think the markets will stabilize? I mean, how far down are we? Are we going to go much further? Do you think we're going to start to see, a comeback? You mentioned, Dan, particularly, CuraLeaf is a bit of positive. I mean, that's pretty rare with an MSO. Where do you see the receptivity with your investors and your stock going? Not that you're allowed to give stock advice here. But.
Yeah, I would think that I tend to agree with Brian. I mean, he's exactly right. What I'm seeing in my discussions with people, both in the public and private side, is that there are funds, especially in the U.S. side, that, again, they don't have a mandate from their LPs to be able to invest in THC or U.S. companies currently, but they are starting to look at carving out portions of that or just raising new capital in order to invest in the space. So my guess is they're one to 2 quarters away probably from getting there. So even for smaller folks out here in the audience, I think the capital will get here. It's just going to take some time, right? Those are dedicated raises, and those are very specific raises, and there are certain people that just won't touch it, right? But there are people doing work, and I think they're going to be successful ultimately in getting some partners involved that want to invest directly in THC and cannabis in general. So I don't know if we're there yet. I don't have a crystal ball. I wish I did, but it feels like we're getting closer given the fact that there's so many eyeballs on the space and so many people looking for ways to invest in the space.
Are you seeing, Brian, with respect to your placement deals, and Greg as well, because you see the structure of these deals, before there was a euphoria, people were throwing money to get into this space, and the operators who controlled the cannabis operations could pretty much dictate terms. People were willing to take very low percentages just to get in. Are you now seeing that since cash is tighter, that the tables are switching, and you're seeing more control given to investors, obviously much lower valuations? What are you seeing in the deals that you're going out to market?
Yeah, so I'll start. I think there's been a shift, a little maybe slightly back towards the buyers because of the cash crunch. I mean, some of the deals that we're looking at right now, there's not as much cash up front on the cash deals. We're seeing earnouts now in a number of these deals, so we're getting back to fundamentals. So maybe a little bit less euphoria than we had seen, say, a year or so ago.
I'd kind of add 2 things to that. One, from an equity raise perspective, there's often some sort of promote structure. So the fund will try and earn something back, and there's various terms that go into that. We're seeing those become more modest. So what the actual fund is charging, we're seeing that better. And then I just want to add a data point. This is direct to your question, Frank, but just to kind of give some sort of sense of valuation and what people are getting paid. We talked a little bit about valuation in the last panel, but for us, pre-summer, we would look at kind of the broader cannabis market, right? And a lot of equity research analysts would do the same, and you'd value these companies off of a 1 year forward or a 2020 calendar year, either EV sales or EV EBITDA multiple. And again, just speaking broadly, from an EBITDA perspective, we'd typically look at 8 to 12 times as kind of normal. And then from a sales perspective, kind of 2 to 4, roughly speaking. We've seen, again, speaking generally, you've seen those valuations on from an EBITDA perspective come down kind of 3 to 4 times, and from a sales, 1 to 2 times. So just the sheer value that these companies are commanding in the market has, over the last 2-3 months, has come
That's
down.
a huge drop.
Pretty
It used
substantially.
to be 10
yeah.
to 12 on the EBITDA side, now down to 3 to 4. And one would argue that's obviously a little more rational. But you're also seeing crazy terms. I still don't understand the acreage deal. $300 million up front, $3 billion if they go legal. Are you seeing those kind of perspective, unique terms in deals? I mean, that to me is just a little unexplainable. I'm curious, Dan, what you might think about that.
I'm not going to really comment on one of our competitors, quite frankly, but I would say that, again, talking to what Brian's talking to, I mean, at some point, right, I mean, if you've got a cash flow producing business, whether you're large or small, right, the relative valuations get to a point where there's going to be meeting points across the space, right, where people are going to start to get together in a more rapid way. And when you're talking 3 to 4 times multiples, I mean, my prior life and my prior space, I mean, there were distressed assets that would trade at 5, 6 times, right? These were cash flow producing assets in the casino business. And those were considered very distressed assets, right? So when you're talking 3 to 4 times, that's extraordinarily distressed.
Sorry, just to be clear, they've come down 3 to 4 times.
Oh,
so
come down 3 to 4
From
times.
8 to 12, kind of down 3
Got
to
it.
4 times,
Okay.
not down 2, 3 to 4.
Okay,
but
right. Perfect.
Nonetheless,
Okay,
yeah.
fair enough. Still, fairly low strike points, right,
Right.
compared to where they've been. And, I mean, given that you can't find another industry, I think that's growing sort of revenues across the board. I mean, if you look at the states and sort of aggregate things up anywhere between 20 and 30% from revenue top line perspective, and at some point you have to think the better operators are going to start producing more and more free cash flow out of that as these businesses mature and as cultivation catches up to the demand that exists in these markets. I mean, that's to me like late 1980s gaming, right? When you had a few assets out there, you'd open the doors and it would just be a cash register for a couple of years, right? I mean, eventually competition comes in the market and squeezes your cash flows, but you do have a window of 3 to 4 years where you can really make hay, right? And if you've got assets that distressed, deals are going to get done for sure at those levels.
Well, where the stock price is so low, do you see the opportunity, or do you think there will be a possible trend of taking these companies private or buying back their stock? Are you getting any of those kind of inquiries to look at deals in that manner, Ariella?
So we are. There are private equity firms that are, thinking about ways of taking public companies private and doing roll-ups. And there are public companies that are sitting there saying, my stock price is here. It was here, 6 months ago. We've only delivered positive results. We've only, I would say, continued to execute. We'd be out of the spotlight, and we would be better suited to be private right now. So yeah, we're having preliminary conversations. I wouldn't say that I think there's going to be a large private equity firm that's not specifically cannabis focused, make that jump, in the next month or two. But I think it could be on the horizon, in a little bit longer term.
It strikes me as a true opportunity right now. Are you, any of your clients talking to you about those kind of structures, Richard?
There are a few that are having early discussions and seeing the ones that are kind of in the middle that were maybe a year, that they went public a year after some of the more established ones that are in that kind of cash crunch right now. So they are having those type of discussions. They're looking at various alternative financing arrangements as well. Especially on the Canadian side, they're trying to do kind of upfront supply agreements just to raise upfront cash to get them over this cash crunch. I think on the Canadian side particularly, there's 2 issues that they're hoping will improve their results. One, our retail distribution has been very slow, so our government's got too involved, and especially in our province, Ontario, there's only 25 retail stores open. And so a lot of the LPs thought that they would be selling a lot more in Ontario, which which is the biggest market in Canada. So as that opens up, they're trying to weather the storm now, and if their sales increase, then they think that they can get over this. And a lot of them are also looking at Europe. So we're seeing a lot of focus on Europe because the pricing is much higher, and Canadian companies, if they're EU GMP certified, can ship product into Europe. And so the pricing is probably triple what they can get in Canada. And that I don't think is open to the US companies. So that's been a very big focus for a number of our clients. So that they're hoping that they can generate the cash from sales as opposed to just the financing.
Ariella, you mentioned something that was really interesting. We've been contacted by a number of pet companies wanting to get into the space, but you actually had a client who did the reverse of buying the pet companies. Are you seeing other sectors where you think that there are going to be those kind of opportunities?
Definitely. I think beauty is a great spot for that. So beauty companies that trade, either to a cannabis company or, some kind of combination between a company that has a brand that has distribution that could be easily leveraged into a CBD product. I think, beauty is a great spot for that. And then there are well-known brands throughout, I would say, consumer industry, whether it's beverage, it's food, that could lend itself well to a cannabis product, whether it's home, a candle company. There are just, an enormous amount of companies that have developed a strong brand and a strong distribution infrastructure that could lend itself to be paired with a cannabis company.
Yeah, no, it's a very interesting angle to be thinking about. So Moelis has got to put that hat on so they can start selling those companies next.
And just to add to what you were saying is a lot of the Canadian LPs, now that edible went legal last week, almost every LP is looking at licensing deals with bigger, whether it's cream companies or just various industries that they're going to try to get upfront licensing fees and expand into the Canadian market.
So one last question, then I want to open it up to the floor. When do you see this turning? I'll go down the list here.
I think it's pretty simple. You're going to see earnings come out, and you're going to, like I said before, you'll have companies begin to get rewarded, hopefully, for good earnings, either meeting profitability or becoming much closer to profitability, executing. You're going to see a lot less, you've already seen a lot less, but you're not going to see companies pay outrageous multiples for a license. And you'll see just more, I would say, conservative cash deployment, and you'll start seeing companies get rewarded, and you'll start seeing companies being penalized. You've already seen it. So I think this, over the next 6 months, you'll have 2 more earning readouts, and I think you'll start seeing the companies start being rewarded, and I think that's when it turns around.
You agree with that, Dan?
I do, yes. Yeah, I would share that sentiment. I think it'll shake out eventually. It's going to take a few quarters, would be my guess. There needs to be some positive headlines. There's just been a lot of negative headlines around the space in general, right? It's just been sort of unending. It'd be nice if we could get something like the Safe Bank Act through. It may not happen in 19, but hopefully it happens in 20. But there's some catalysts on the horizon, certainly, right?
Yeah.
One other thing is that the new issue market, especially for, I would say, U.S. exchanges, whether it's NASDAQ and New York Stock Exchange, has been pretty horrible this year. So there have been 2 companies went public, and a lot of investors lost money. I would say if there was a company that went public on the NASDAQ and New York Stock Exchange that performed well and investors made money, then that'd be a very positive catalyst for the industry.
Okay. So I want to open it up to the floor. Do we have any questions? I know people are dying to get to the bar, but just a couple of questions. Just raise your hands. Must be a very thirsty crowd. Sure? Okay. All right. Well, I want to thank the panel for joining us. I want to thank all of you for joining us today. And on behalf of Scott Moskal, Joe Volman, my team at Burns & Levinson, we hope to see you next year. Thank you.
Thank you.